Really appreciate you taking this time out and joining us, sir. Thanks so much for for being with us on earnings call on ET Nav. That's Petro and LNG. Speaking about the numbers, in a bit we'll get in the management of Dabur. Should pull up that stock also for you and show you what it's done. It's Petronet is up close to 1%. Dabur just about flat, ending flat in the session. In fact, off from the highs of the day. But as we said before, splendid performance on the quarter by Dabur India. They have shown tremendous volume growth. I think the best volume growth that they have shown in the last 11 quarters. Let's get in the management. Mr. Lalit Malik, CFO of Dabur India Limited, joins us from New Delhi to speak about the numbers. Good having you, Mr. Malik. Thanks so much. Okay, we'll just get to Dabur India in just a bit. Interesting performance by the stock for sure. I'll just read out what they did in the quarter. The sales up 12%, PAT up 17%, and margins at 17.8% versus 17%. So almost an 80 bips improvement in the EBITDA margins for Dabur India. It's been a strong show even by the company. That aside, the consumer business gained almost, at least the top line revenue front gained almost 13%, with the food business gaining 21%. And the margins, consumer care business came in at 22.9%, so 100 bips improvement. And the foods business margins dropped a bit. So that is something that we'll get the management as well. Lalit Malik, the CFO, is with us. Mr. Malik, good having you. Thanks so much for joining in. Before we get into the segmental numbers, one word really on how did Dabur manage to achieve the volume growth, 12%, the best number in the last 11 quarters. And is this sustainable?
Yeah. Hello.
We can hear you. Please carry on.
Yeah, okay. So I think in terms of the sales growth of 12.3%, I would say that yes, it is sustainable, as we have always maintained that the volume growth would be between 8 to 12%, and we are on track in terms of EBITDA growth of 21.6% and PAT of 17.6%. I think we see a steady growth going ahead from here.
Right. What would be your targets on volume growth from here, into the new financial year?
Well, I would say that it would be between 8 to 12%, as I just said.
Okay, so you're actually saying that for the next financial year, Lalit, you think that you would be able to do a 12% YOY volume growth?
Well, as I said, that we normally target between that range, though I cannot give you any specific number as we don't comment on the future prospects, but that would be the range that we would look at for the next year.
What about pricing then? What kind of year-on-year increase in pricing do you see from here?
Well, I think we do take into account various factors in terms of the market conditions, the interest rates, the competition, etc., to decide on pricing. And if we were to take that in terms of the price increase as compared to what we have in the last year, we would say there would be a slowdown in terms of price increase, but it will all depend upon the segments, and it will also depend upon the external factors. And we will be taking the price increase on a selective basis, depending upon the requirement.
Yeah, I was just asking you what kind of price increases would you take during the course of the year?
Well, we cannot comment on it, but somewhere we can say between 3 to 4% could be the range.
Lalit, before we get into the segmental numbers as well, I know you commented upon it that a ballpark range of 12%, but since that's been the big standout point for you this quarter, the volume growth of 12%, I'm just dwelling upon it a little bit more. The range, I know you can't give me an exact number, but do you think a 10 to 12% volume growth is a distinct possibility for the next year as a whole?
Well, I would still say that anywhere between 8 to 12% would be a possibility to take it forward in the next year.
Let me just assume that you're playing safe. Let's talk about the different segments as well. And, on the EBIT front, I saw that while on the top line, the revenue front, consumer care grew 13% and the foods business grew 21%. On the EBIT front, the foods business margins at 15.5%, which dipped close to 400 bips. Is that a bit of a worry, or do you think 15 or 16% is the new norm for the foods business?
Well, I would say that there are factors involved into this dip, primarily on account of exchange impact. which has pulled the margin down, and there has been an impact on CVD and excise, which has pulled the market down. However, having said that, we are taking all the actions to provide the value to our customers and increase our margin as we move forward.
No, which is fine. But my point being, okay, let me not talk about just the foods business as a whole. Do you believe consolidated the 80 bips improvement on margins that you've shown this quarter, that bit of an increase, is that something that you will be able to maintain for the next 2 quarters, if not the year as a whole?
Well, if we were to just look at overall scenarios, our last quarter was pulled down a little bit on the international US market, and if we see the strengthening of that going forward, we do expect that the margin should be within that range. As I said earlier also, it depends upon various international factors and economic factors, but we do see that margin to be stable as we look ahead in financial year 13-14.
Right. Also, give us the strategy as far as promotions goes for the year in terms of advertising as a percentage of sales.
Right. As far as the percentage of sales on the advertisement and sales promotion, we are within the range of 12.5 to 13 to 13.5%, and we do expect to maintain that range between 13 to 14% as we go forward in the current financial year 13-14, and we do evaluate in terms of the effectiveness of the advertisement and the promotion to increase our margin and our top line.
Your financial cost has also gone a bit higher, from 5.7 crores, it's come in at about 15 crores, 3 times increase. Would that correct itself?
Well, it should correct. It has 2 components involved into it. Number one is on account of exchange fluctuation that has hit us in the finance cost, and second is our working capital short-term borrowing interest cost, which is accumulated together, and therefore you see that increase as we go forward. It will depend upon the exchange as well as it will depend upon the working capital requirements to evaluate in terms of the finance cost.
Before we leave you, Lalit, just wondering how is the international business looking like? I was reading a brokerage report which spoke about a few factors, including rural penetration, stable business outlook, but more importantly, revival expected in the international business. Is that something that you guys at Dabur are citing as well for the next fisc?
Well, yes, I think we would say, as I mentioned earlier, in the last quarter we have seen some pull down on account of our US business, and having taken all the necessary actions there, we do see that giving us positive results as we move forward in financial year 13-14. Coupled with that, our international business is overall approximately 30% of our revenue. We do see international business to strengthen in the future years to go.
Yep. Okay, we will leave it at that. Lalit, thanks so much for taking the time out and joining us. Congratulations on a fantastic volume growth displayed this quarter, and we'll of course look forward to interact with you post your next quarter numbers as well. That's one FMCG company along with HUL, which has had a good performance at least in today's session on the markets front as well as on the performance front. Take a break, come back with more.